All right, Ravinder, thank you so much for that update before the Federal Reserve meeting ends. But breaking news flashing on your screen, the September IIP has come in at 4%. Now, this is a tad bit of surprise given the expectations. To discuss IIP numbers, we have with us Siddharth Sanyal. Siddharth, hi, good evening. On the first take, how do you see 4% IIP in September?
I tend to say the 4% number is a good number because if you see in the previous quarter the IIP number growth rates were relatively weaker. This is a full quarter where IIP growth actually held in that kind of a vicinity, and also this is a time this year around this time there were two important developments. On one hand, festival season was relatively earlier in this particular financial year. And the other thing is this is the time when the GST cuts, etc. come into effect. So what we get to see is that while gradually we come closer and closer to the festival season, still the momentum of the IIP number, which started a couple of months back, it actually maintained that particular momentum, which is a good development compared to the previous quarter. Also, now given that the full benefit of the GST cuts will eventually be visible from this month and next month onwards, I think as we enter this particular phase with a 4% plus minus kind of a zone, it's a pretty decent momentum and we need to maintain that and improve that.
Definitely, and as far as the comparison of the last few months has been concerned, the last 3 months consistently IIP has been maintaining 4% rate. Aditi, hi, welcome to the show. What is your reading of 4% IIP numbers for September?
Thank you. I think I'm also going to take a constructive view on this number. I thought after looking at the core sector number that we were going to get a lower growth than this, but manufacturing has done better than what we were expecting, coming in at about 4.8% YOY in the month of September. And I think this is going to be a sort of portent of what is to come in terms of what we already know about the festive season having been quite robust. My sense is that overall, if we look at Q2 and Q3, we will have this little bit of concentration of demand really coming in the month of October, drawing down of it. So higher production in the run up to the festive season, drawing down of inventories during and right after the festive season, maybe a lull in production after that, and then again a recovery as far as overall demand is concerned over the course of this quarter. So I think it's going to be a bit of a mixed up quarter with a huge concentration in demand during the festive season.
Right. Let me also take us through the details which is coming for IIP. The manufacturing is at 4.8%, electricity at 3.1%, and mining has remained at minus 0.4%. What is your take on manufacturing, Siddharth?
Well, I think here also the number is holding in that particular zone. But what is more interesting to me, while I am yet to see this particular month's number, in the recent 1 or 2 months I have seen one green shoot is that the intermediate goods number started inching higher. I think many a times it's a very significant factor, and that's a positive factor. That means eventually for the next few months, the manufacturing sector are taking a slightly positive outlook, maintaining some kind of a positive outlook for the next few months. That needs to be observed very, very carefully, because in the previous months, the capital goods had often been a very dominant factor in the overall IIP development. But going ahead, I would expect the consumer goods number and the intermediate goods number to be playing a more significant role in case we need to see that IIP momentum is maintained.
And the intermediate goods number for the September month has been it has been 5.3% to be precise, and infra goods has come in at 10.5%. Consumer durables over 10%, again at 10.2%. What is your take, Aditi, on consumer durables as well as intermediate goods, which was mentioned by Siddharth as well?
On consumer durables, I do think that this is the fact of the GST rationalization and the expectation that demand was going to pick up in the festive season, and big ticket items would have really benefited during this period. My sense is here we are going to possibly see a bit of a lull after the festive demand is saturated, and consumer non-durables impact of the benefit of the GST rationalization on smaller ticket items, I think will be possibly less, we'll see less of a spike, but it will be a more sustained demand going forward. So that's what I'm expecting, that we'll see better numbers for consumer durables ahead, but they will not be as high as the peak that we've seen for consumer durables.
Right, and consumer non-durables, as was mentioned by Aditi, for September month, it has come in at minus 2.9% versus minus 6.4%, which was there in the month of August. I want to understand from you, Siddharth, regarding the consumer durables. It has come in at over 10% this time. Of course, the festive impact will be more in the October month. Do you see a further spike and then a decline?
Oh, I think Aditi summarized it nicely. I think it's a dual impact of both early festival timing as well as the GST impact. And if that, what is expected is that for a month or two, it might actually be hovering in that kind of a zone. But obviously, it cannot really sustain at this kind of a level for a very long period of time. What is more important is that when it actually de-escalates from the festival time peak, whether it actually comes down at a level which is lower or at a similar level compared to, or a slightly better level compared to the previous quarter or the previous months. My sense is that now, given that there is a bit of sustained support in terms of low inflation, better disposable income, as well as better disposable income from the GST side, this number can be slightly better. So after the immediate de-escalation, it will possibly be a slight, some kind of a sustained growth, which needs to be seen as a pretty healthy development if it happens.
Right. Aditi, 3 months in a row, the IIP has sustained 4% mark. What is your expectation for the next quarter?
Look, I think we'll get a very good number for the month of October, and then possibly a dip after that in November, purely because of the base effect related to Diwali. So possibly we need to look at averages now going ahead for the next quarter, instead of just looking at specific months in isolation and getting carried away with the strong base effects. Overall, I do think that we should be able to sustain a higher growth in Q3 as compared to Q2. I would expect that the average numbers should improve. However, the impact of tariffs and how the global situation is evolving will also have a bearing, not just the positive impact of the GST rationalization.
Right. On the growth front, Siddharth, what is your expectation? How much of the impact should be there in Q3 and Q4?
Well, for the full year, we are gradually revised the number slightly higher compared to where we started for the full year, which was around mid 6%. So compared to that, we have moved a few basis points higher. I think the overall the Q2 numbers might actually be holding in a zone which was anticipated earlier. We don't see too much of a change, but there are promises for the numbers to be revised slightly higher in the subsequent quarters if this particular momentum is maintained. But in that for that to really sustain, a very important factor is to get some bit of certainty or some de-escalation of the high uncertainty on the global front, which is impacting a lot of manufacturing sector, a lot of export-oriented sectors. Very clearly, we need some bit of better clarity on that particular front.
Right. Aditi, which are the sectors particularly you will be watching out for in next 2 to 3 months, which are critical for growth to pick up?
So, I'll be looking at whether the consumer non-durable number, for instance, at least comes back into the positive territory. I think that will be something which will give us a more sustained demand momentum rather than sort of the spikes that we could expect to see in consumer durables. But those will represent buying that will happen, of items once in a while. It's not going to be something which is going to be a repeat consumption that is going to happen over and over again. So I will look at whether the consumer non-durables performance starts to become better from what it has been in the recent past. And of course, the exports number. And other than that, I think one key data point which will be coming up will be the GST collections for the month of October, the transactions in October which will get reported in December. So I think the GST data that we get on December 1, possibly that will be very critical for us to understand both how the growth side is moving as well as what will be the impact on the fisc.
All right, so these are the expectations which Aditi and Siddharth has. Thank you so much for joining at this hour with the explanation of the numbers which has come in at this month. But for now, it's time to take a very quick break. After the break, a lot coming up.